Okay. Good morning to all of you. Myself, Mir Mohsin Farouk. Uh, I'm today. I'm going to teach you about evolution of cryptocurrency. Okay. So what is this? Cryptocurrency. This is a form of digital currency. Okay. It's a form of digital currency, and we are going to discuss about the evolution of cryptocurrency from Bitcoin's birth today to today's 3.1 million trillion market, a journey through digital work. Okay, so first of all, we are gonna say what's cryptocurrency. Cryptocurrency is a form of digital money that exists only electronically. So the main thing is it's not in cash, not gold, nothing. It's digitally. It's like a number. It's like a pin code. It may be an image, but it's digital. Okay, there's nothing physical in it. Unlike traditional currency, it does not need banks or governments to operate. Okay, so it does not need banks and governments to operate. We can operate it individually, and what we do, we can, without any third person or without any specific platform, we can transfer these Bitcoin, yeah, or any crypto to one another without leaving any footprint. Okay, so this is the key feature of cryptocurrency. So cryptocurrency is digital money that exists purely in electronic form, unlike physical cash or traditional bank accounts. Okay, no banks operates without banks, central banks, or intermediaries without using decentralized technology called a blockchain. Okay, there is a word blockchain here. We are going to discuss it later. Blockchain to record transactions. Okay, then its securest form. Okay, of any transaction, this is the most secured one. Secure transaction use advanced cryptography to ensure secure tamper-proof transactions that can be altered or counterfeited. Okay, so this is this. So we are going to see this from start. Okay, uh, in 2008, Bitcoin white paper published by Satoshi Nakamoto. Okay, it was introduced by Satoshi Nakamoto, and then in 2009, the first Bitcoin blocked mine started cryptocurrencies. Okay, so the first Bitcoin was mined in 2009. Though it is an important thing to learn. And then in 2010, exchange started. So when you have something and it holds a value, you can exchange it. This is basic. This is very basic. In order to receive or give things to one another, what you do, you exchange. And the first exchange happened in 2010. El Salvador becomes first country to adopt Bitcoin as legal tender. This is an important thing to learn. Okay, number 5. Projected mainstream adoption of blockchain by governments and institutions. So again, there is this thing known as blockchain. We're gonna first learn how this blockchain and what is this blockchain. Blockchain. Okay, blockchain is a decentralized, immutable digital ledger that securely records transactions across a network or computer nodes. It stores data in blocks that are cryptographically chained together in a canonical order, creating a permanent tamper-proof record of information. Okay, so basically, what it does is it creates a network. Okay, it creates a secure network in which transactions are recorded in the form of blocks. In the form of blocks, these blocks are very difficult to see or to gain access of, because these they create n number of mathematical problems or n number of questions, so that one could have to solve each one of them. One would have to possess high electronic devices such as supercomputers or good GPUs to solve these equations, to solve these problems, then get a code of block. And this is actually how crypto is mined. This is how it's done, because they are all on the internet and we just have to find them and find the solution of these problems. So this is how blockchain works. Okay, so it come the transaction is created, networks, computers, they note, they verify it, then the verified transaction grouped in the block, then the block to a chain forming an unchangeable record. Okay, so this means blockchain is transparent, secure and tamper proof. Okay, um, on to the next, the first cryptocurrency. Bitcoin was created in 2009 by a mysterious person called Satoshi Nakamoto. Okay, now this is not some mysterious character. We all know him, and his crypto wallet is 24/7 online, because he holds the major, about 90% of the market of the Bitcoin. He holds it, and his wallet address is online, is public. We can all see it. But if anything happens, if he wants to change, or if he wants to transfer a single bitcoin in public, we see it, any transaction on his account, the whole market will collapse, because he holds 90% of the bitcoin market. Okay, he has 90% of shares, and and if he tries to sell or buy any more crypto and we see any transaction in his account, the whole market will get into panic, because if he tries to sell and we see that activity, he we see that activity, we know, if the market, if he tries to sell something and we know there is a change in his account, the whole market will collapse, because the whole market will be terrified. The only reason is there will be more crypto, more bitcoin, less value. So bitcoin will lose its value and the market will start collapsing. Okay, so this is this. Then Bitcoin was created in it was the first digital money that works without banks or governments controlling it. Okay, mystery created. Nobody knows who Satoshi Nakamoto really is. They disappeared after creating Bitcoin and never revealed their identity. Okay, Bitcoin use blockchain technology, which makes it very secure. Every transaction is recorded and cannot be changed or deleted. Okay, we know it. People call it Bitcoin digital gold because its value keeps growing, and there will be only ever 21 million Bitcoin created. Okay, so this is this. Now one we have to see. I only told you how blockchain works. Now we will see here. So the what is the first step? Transaction initiated between parties. Okay, now first step is transaction is initiated. Now the second is transaction verified by the network nodes. Here it's it's the main thing. These nodes verify this transaction, and these After verifying by nodes, after getting verified by the nodes, the verified transactions are grouped into block. Okay, they are grouped into block, and then the block is added to the previous chain, or the block is added to the chain. This is how mainly blockchain works. So this is about it. Now we will see the market of Bitcoin from 2009 to almost 2014, or we can say 15. It's will be up to here somewhere. Okay, at 2009 up to 2013, it was not of a very great value because there were two reasons why it was not a digital currency was unknown to common men. It was the first reason. Second, it was difficult to understand and believe. Okay, there was the two main reasons of why Bitcoin started here, and up to 2013 it was here. So Bitcoin started as almost a zero value and reached over 106 in 2024. ठीक है, $106 million, क्या $106,000. That's million% growth. Hi, Bitcoin hit new all-time highs, showing strong investors' confidence and growing acceptance worldwide. Okay, why this happened in 2024? This this is because people understood how technology people understood how technology works. People understood its value. People understood the tracks, the traces that normally the money leaves behind, and how it creates sometimes a problem. But Bitcoin, it's untraceable. You cannot just go and trace. It's not something you can just go and look on papers. No, it's very difficult, it's very hard, and it literally changes its path every 7 minutes. Okay, so when people understand it, mafias, underworld, government, I would say in government, black market, everyone got interested into what Bitcoin, and it reached its peak in 2024 and even reaching higher. Okay, so we will know about the major cryptocurrency that are found today. Only Bitcoin will know it's the number one, the original cryptocurrency with the largest market capitalization. Then Ethereum, smart contract platform establishing decentralized applications. It is a bit same as Bitcoin, but it's a bit different. Okay, then third is Tether, stablecoin pledged 1 to 1 US dollar. Okay, this means $1 is equal to one Tether. Okay, then fourth is digital payment XRP, digital payment protocol for fast cross-border transactions. Okay, it's self-explanatory. Okay, then there's Solana, high performance blockchain supporting decentralized apps. Dogecoin, it was a meme cryptocurrency that gained mainstream popularity. It was basically founded by Elon Musk. It started as a joke, but it holds a great value today. Okay, crypto market size today. We will learn about what is the crypto market size today. Okay, so total market value is 3.1 trillion. Okay, 3.1 trillion is the total market size of cryptocurrency today, and the global users are 559 million with 25,000 different cryptos used by 195 countries. Okay, these are very big numbers and really big numbers. Okay, the cryptocurrency market is now worth $3 trillion, showing huge growth from almost nothing in 2009. Bitcoin leads with 50% of market share. Ethereum is second biggest cryptocurrency. Market grows bigger every year. Okay, user growth. More than half billion people worldwide now own or use cryptocurrency, making it mainstream technology. Okay, I already said the reasons why it's happening, because people understood how this crypto works, how digital currency that they use already. Like we use Google Pay, that's and we use Google Pay, we use Phone Pay, or we use any SB application or JK Bank application, and any banking application we use it. It's very traceable. It leaves lines. I mean, look, if I transferred you $1,000, I 1,000 rupees, I transferred you 1,000 rupees, and you you did what? You transferred 500 rupees to someone else, and then he transferred 250 rupees to someone else, and this happened until it became zero. Okay, the thing is, the 1,000 rupees I shared, it has its hash value. This is a digital footprint. This is a digital footprint. Okay, this is a digital footprint. What I did, if I shared 1,000 rupees and shared 500 rupees to someone else, it created its own hash value. Even 1 rupees of these 1,000 rupees has its own hash value. So every single rupees that I use in this, every single rupee, it has its own hash value. So it's traceable and it's very easy for government or high authorities to trace it without any difficulty. It takes zero effort for them. Okay. More than half people, this is why, okay, already said why people are going to crypto. Okay, 28% of Americans own cryptocurrency. Young people adopt crypto faster. Then mobile apps make crypto easier. This is also, as I said, in 2009 to 2013, people have low to none concept of tech. It was very difficult for them to digest and understand it. Okay, business adoption. Okay, this is what makes crypto mainstream. Matlab, today it's also a reason. It's not only the reason, but it's a main reason. Major companies and banks now use accept cryptocurrency, showing it's becoming the part of regular business. Big banks offer crypto services. Companies will add Bitcoin to savings. Okay, payment processors accept crypto. Okay, this is about it. So now we are gonna learn about what are the benefits of crypto. Fast payments anywhere in minutes, low transaction fees, especially for cross border transfer, global access to unbanked population, privacy, identity are protected while transactions stay permanent. Okay, this is everything you need to that crypto offers us. Okay, fast payments, zero to none time, low fees. Look, if I have to send 1,000 rupees from India to Saudi Arab, from India to America, we use government take as convenience fees, and if I send 100 rupees, I will have to give 51 rupees extra. So it's a very lot. But instead of these normal, if I use crypto, it will just use if I have to send 100 rupees, hardly it will charge us 7 to 8 rupees. So this is the major benefit. Global access, you can access it globally. If you have internet, you can access crypto. This is it. If you have internet, you can access crypto. There's no need to make a bank account. There's nothing related to banks. If you have internet, you can use crypto. You can access crypto. You can share transfer. You can mine crypto. Privacy. Okay, as I said, the main reason it became mainstream was its privacy. When people understood it, it became mainstream. As offers anonymous transactions that protect your identity while maintaining transaction transparency on the blockchain. Okay, this is self-explanatory. I hope you get it very well. Okay, crypto challenge today. What are the challenges that we face as a crypto owner or as a trader? How are these problems affecting us? Okay. Now the thing is high price volatility. This means currency prices go very up and down quickly, making it very risky for everyday use and saving. Okay. The second thing is security risk. Hackers try to steal cryptocurrency, and if you lose your password, your money is gone forever. Look, this is something that, let me explain this. If you forget your password of your wallet in which you have saved your crypto, your money is gone forever and it's inaccessible to any other. Now the security risk is, there's only one thing that's keeping you safe is your password, and that's it's basic. It's not that like it can be hacked through no, it's just if you lose your password, if you save your password on some random page on your some random note on your mobile phone, that can be accessed easily. There's other than there's no other possible way. So it's a bit wobby sobby. Okay, I'm a reel fan also. I watch too many reels. Okay, third thing is government rules. Different countries have different rules about cryptocurrency, making it confusing for users and businesses. I mean, look, crypto is total private. Mm, None can see its transaction history except the two-person they have transacted with each other. Otherwise, no one can see it because it gets stored in the blockchain, and it's very difficult. Not it's, I will say for now that it's impossible to crack blockchain. Okay, so because of the underground, the mafias, the gangsters, the black market, the dark web, they want crypto. They have their transactions in crypto, and they are when like if there is a government that's watching all this happening in they would definitely ban the crypto because they cannot track it. It's very difficult for them. So they have made different rules in their different countries, which makes using a crypto sometimes between very hard. Sometimes it makes crypto very hard to do our transition stuff. Okay, energy use. Okay, this is it is a major flow in crypto. Okay, some cryptocurrencies use lot of electricity, which is bad for environment and cause criticism. Okay, now you would say how is electricity used to crack blockchains? No, you cannot crack blockchains. You just follow some random equations and get some coins mined. It's that, but it takes a hell lot of energy and hell lot of high-end machines to do this work. So this is a bit of a slow down for this. Okay, how crypto mining works. Okay, now everyone, I would say everyone would be waiting for this one. We will learn about how crypto works. Miners use powerful computers to solve complex math problems that verify transactions. Huh? Busy issues, your phone. Okay, miners use powerful computers. As I said, they use high-end devices, high-end machines to solve complex math problems that verify transition. Okay, this is what I already said. Verification. The network verifies the solution is correct before accepting the block. Okay. Mm. The reward. Successful miners receive cryptocurrency as reward for their work. Okay. Blockchain update. Verified transitions are added to the public ledger blockchain. So this is how blockchain works. As I said, first what you do, you solve with energy of any form. Okay. Then it gets verified via nodes. Internet nodes, by nodes I mean internet portals. Internet via internet, then we get reward, and then it's updated into blockchain. Okay, so this is it. Now we will learn about Ethereum. That's more than money. Okay. Ethereum enables self-executing contracts with the term directly written onto code, eliminating intermediaries and reducing costs. Okay, self-explanatory. DEFI applications, decentralized finance built on Ethereum. Okay, it was mentioned here. Ethereum is the most decentralized thing. Okay, Bitcoin is also, but its highlight and main property is its decentralization. Okay, decentralized finance built on Ethereum provides open access to financial services like lending, borrowing, and trading without traditional institutions. As I said, NFTs. Okay, this is new. NFTs, they are new. Non Fugible tokens on Ethereum enable verification ownership of unique digital assets, revolutions, art, collectibles, and digital identity. NFTs are like photographs, they are like paintings, but they are online. Okay, I mean they don't have real existence, they don't have physical existence, but they exist electronically, and they have very high value. Okay. Stable coins, stable cryptocurrency. What are stable coins? Stable coins are special cryptocurrencies that keep the same value as regular money, like US dollars. They don't go up and down in price like Bitcoin. This makes perfect for everyday payments as business. Stable coins possessed 48 trillion in transactions 2025. It's very impressive and huge number, almost as much Visa and PayPal combined. Okay, PayPal and Visa combined. This is a huge number. $46 trillion dollars. Okay, this is a huge number. Okay, though how this works, how decentralized finance institutions work. Lending, peer-to-peer lending protocols eliminate intermediaries. I mean banks, moderators, and other, offering better rates for borrowers and higher yields for lenders. That's one good use of crypto trading. Self-extend. Decentralized exchange enable trustless trading with automated makers and liquidity pools. Insurance, smart contract based coverage protects against smart contract vulnerabilities and protocol failures. Okay, and then savings. Yield bearing accounts provide compound interest without minimum balance or withdrawal transitions. So, this is this. NFTs, digital ownership revolutions. So, this is a very interesting topic. Digital art. NFTs are, as I said, they are digital art. They don't exist physically, but they exist electronically. Unique digital pictures you can own. Artists sell directly to collectors online, eliminating moderators and those. Blockchain provides you your proves you on the original block. Main thing is blockchain. Huh? Okay, gaming items. Own characters and weapons in games. Trade items with other players. Keep your stuff between different games. Okay, this is one of the. Okay, let me tell you something about this one. Games like GTA, now GTA 6. Okay, it's if you have heard about it, you can trade with crypto. You can uh, own real money in the game. You can sell or exchange products in the game. It's only happening via this NFTs, tickets, and more. Concert and event tickets as NFTs. Membership cards for special clubs, proof of attendance at events. Okay. Government regulations and change. Ban period. Government actions to prohibit cryptocurrency transactions. Okay. Then they accepted it. Governments begins recognizing crypto as their final financial instrument. Okay, almost 2014, I guess. Rules and creation. Government establishes regulatory framework for crypto operators. 2015. Integration. Government incorporates crypto into existing financial systems. Okay, this is happening since 2015. Okay, so became this all happened in the period from the period 2008 to 2000, I would say 14. Okay, 2008, this all happened between, and this is ongoing. Crypto adoptions by country. Okay, so first it was United States, 21% adoption rate, friendly regulation, investing trading, growing fast. India 12, adoption rate is 12, mixed approach, daily payments, largest user base. Okay, India is largest user of cryptocurrency. Brazil, adoption rate is 8, new rules in 2025. As I said here, as I said, it's ongoing. It's ongoing. So, cross-border payments, rapid growth. Nigeria, 15% adoption rate. Central bank support, money transfers, lending Africa. Germany, its adoption rate is 6. Clear regulations, business use, stable growth. Okay. Big companies and the crypto. JP Morgan Chase and Goldman Sachs now provide crypto custody services with 5 billion in assets under the management. Oh, that's huge. Companies buying Bitcoin, Tesla and MicroStrategy hold 3.2 billion Bitcoin as treasury assets. ETF investments, spot Bitcoin ETFs from BlackRock. Oh, you have heard about BlackRock. This is the big bull. And Fidelity have attracted 12 billion in inflows, huge numbers. So all this, it gathers only, it gives us only one message: the crypto is emerging and it will properly establish itself. How crypto payments work? Wallet setup. Install and configure a cryptocurrency wallet application on your device. As I said, it works on a wallet. Then account entry. Enter the exact amount of cryptocurrency you wish to send. Okay. Third, address scanning. Scan or enter the recipient's wallet address for the transaction. As I said, everything it's wallet address. It's like your phone number, your account number. Okay. Verification. The transaction details are verified across the blockchain network. Okay. Confirmation. Review and confirm all the transaction details before finalizing. And completion, that your transaction is complete and recorded in the blockchain. Okay. Crypto versus traditional money. Okay, this is an interesting topic. Cryptocurrency works with very differently from regular banks. It's faster for sending money across the countries, cost less in fees, and you have complete control. But it can be more complicated to use, and prices change often. Okay, okay. This is crypto, and in traditional money, you pay more fee, mm, more traces, but less chances of low rates. Okay. AI meets crypto. Okay, this is definitely one of the biggest things that happened in crypto. This is like a time bomb. And the next big thing that's going to quantum computers entering crypto. Then there will be end. Okay. So trading bots, AI powered automatic. Okay, we created bots that trade instead of us. Security system, security enhancement. Okay, blockchain security solutions using AI algorithms. Okay, market prediction, AI driven cryptocurrency price fostering forecasting models. Okay, this was a huge benefit from AI. Automatic protocol, smart contract automation through machine learning. Okay, and smart analysis, AI based cryptocurrency portfolios management tools. Environmental impact and solutions. Cryptocurrency mining consumes excessively electricity, with the Bitcoin along using more power than some countries. The carbon footprint is equivalent to 60 billion pounds of coal burned annually. Okay, this is huge. And green solutions. Renewable energy mining farms are emerging worldwide. Proof of stake protocols reduce energy by 99%. Carbon offsets programs help neutralize remaining emissions. Okay. Future of cryptocurrency 2025 2030. Technology improvements. Faster transaction speed with new blockchain technology. Lower cost for sending money anywhere in the world. Better security to protect against the hackers and fraud. Government digital money. Countries creating their own digital currency called CBDCs. Okay. Better integration and with existing banking and finance system. Okay, because it's the own most stable and related cryptocurrency options for everyone. Okay. Crypto adoption roadmap. We have already seen it, but it's for the future. Okay, it's 2025 to 2030. Okay, 2025. Current adoption phase with early adoption adopters. Okay, crypto adoption phase with early adopters and niche use cases. Okay, then in 2027, regulatory clarity achievement in the major economics. Mainstream acceptance begin with institutional participation. Okay, as I said, they are CBDCs. Government are taking steps. So this will happen, and mass adoption phase with consumer friendly application. As I said, this will be the crypto is emerging. As I said, this will emerge more, and then full digital economy integration with the seamless crypto fiat systems. Okay, so this is about just thank you for thank you for learning about crypto. Okay, so this is it for today. Bye bye, my friends.